I'm a cynic, and I kind of look at it like, these guys, or some of them are, 80 loan to cost, which might not be super excessive. With bridge debt, interest rates go up. They figure that they're going to put in 15,000 a unit and get, a rent bump of $250 a month, which as of this second might be realistic, or maybe 6 months ago realistic. But I'm thinking this, when you talk about C class stuff, maybe even B, lower B, these people have got to be, the tenants have to be getting crushed with gas prices and inflation. And if they don't get their $250 rent bumps and the interest rates continue to go up, I can't see that there's not going to be carnage. Might not be the right word, but I don't know if it's the wrong word. Or do you say to me, yeah, that all kind of makes sense, but it's just so resilient and there's so many tailwinds for the category that they'll survive?
Yeah, there's a lot to unpack there. First of all, let me just say, Roger, I'm glad you're cynical. We need cynics. The fact is, if everyone agrees and there's consensus, usually you know the exact opposite is going to happen. Everyone is bullish. The likelihood that that is the sort of the tail end of the bull market is significant. So your cynicism is actually a healthy and good thing. When I read, the pessimist, because look, I'm optimistic just because I know history. I'm a student of history. I know cycles. History tells us this. There's nothing new about downturns. There's nothing new about crises. I could reel every single one of them off to you from the 20th century and what happened. And so historical perspective is super important. Now, you are absolutely right. There are plenty of headwinds, and we know the headwinds that are out there. Whether it's, again, the inflation print this morning, which is high. We all know it's going to happen at the pump, and food prices and the rest of it. But at the same time, while there are those headwinds, you got tailwinds, and significant tailwinds. We have undersupplied housing by millions of units for a number of years. So there's just that ultimate big picture perspective. You can't outsource where people live. They can double up and triple up. And the reality is that, think about higher rates. The higher rates and inflation mean that first-time home buyers and a lot of folks that were hoping to get in on the game are going to be renting for the foreseeable future. So that's converted a lot of potential buyers into renters. And I'll just throw another food for thought, and there is higher wages. And actually, it's a good thing. This particular set of inflationary pressures has resulted in increases in wages. Nationally, we're up about 5% wages. I think we've got more to come. So that's how employers are going to have to respond. We're going to see a shrinking of wealth inequality, and more from the haves to the have-nots, or the middle class, which has had to happen in the United States, in my opinion, for a long time. That's happening. And so I think that's also going to allow tenants to basically stay in their units, because employers have to have that anyhow. So I think you're right, and your alarm bells and cynicism are well founded and healthy, actually. But I do think that tailwinds are more than a worthy adversary to counter